gentlemen, do be sure that you share the link while we are live. Do be sure that you smash that like button. Do be sure that you are telling a friend about Mind Your Biz, the new home for Mind Your Biz, and you can get there simply by going to sub.myb.lol. Tell a friend. Be sure that you are sharing on Reddit and on Twitter, especially. If you want to share on LinkedIn, that's an amazing, amazing thing for you to do. It helps propagate the signal, and it also tells YouTube that this content is important to other people on other platforms. They track those analytics, and it helps our channel be more discoverable, and it helps the conversation that we're having in the Mind Your Biz community be more visible. Also, your chats are visible, and the live stream chat will be replayed, so any kind of comment you want to make, including shilling, go ahead. We do not allow links, and if you do shill a little bit too hard when I do address your comment in the live stream, I'll probably edit it kind of heavily, you know, the public speaking thing and all that. I won't let you be abusive to the other members of the Mind Your Biz community, so I don't repeat comments like that, but I do like to interact with members of the community, so do be vocal and do chime in whenever you possibly can. And stream health looks good. I'm going to say it's safe to presume that we are live. Welcome back to Mind Your Biz. My name is Seth, and you're watching the new home for Mind Your Biz. Go to sub.myb.lol to subscribe. Thumbs up, and of course, share this while we're live if you're watching live. Every click counts. But the Mind Your Biz community, I honestly believe your clicks count for more, so I appreciate you being here, being supportive. Why am I dressed up in this getup? First off, it was another one of those really rushed mornings where I didn't have a chance to, do much between the gym and now, and tis the season. Everybody else gets ready to get fat during the holidays. I like to call it bulking season, right? So am I going to shred? Probably not. But I'm going to try to build? Sure. Yeah, we'll try to build. It's the right time of year. Top headline is the Fed and the SEC want you to beg. They want you to beg for it. If you saw this thumbnail, then you might be wondering, Seth, what do you mean by the Fed and the SEC want you to beg for it? Well, we'll talk about that and more as we go through today's content. Like Content Day, we are going to go through our portfolios primarily, and we're going to go through the profitability of mining Bitcoin, the profitability of currently mining Ethereum for as long as that's possible, and then mining any other GPU mineable coins that we've been tracking in our portfolio for longer than any other GPU mining channel, even the ones that copied our morning show format. Hey, whatever, man. That's okay. That's the sincerest form of flattery, and I am flattered that others want to copy our format. Welcome as you come in, make those comments. Well, you shouldn't have any kind of comment filtering or gates on other than no links, so make yourself known. Appreciate that. Today's Fear and Greed Index, though, is 20. What does that mean? It means that yesterday we had a score of 24 and we dropped back down, but last week the average was 20. Let's take a look at that trend. We've been kind of bouncing around this fear, heading towards extreme fear range for a little while, and in my mind, that's an important thing for us to be able to evaluate against our goals. What do I mean? I mean, it's a proper counter indicator for us to say, all right, enough people are fearful that I can maybe be a little bit greedy, or enough people are being greedy that I can maybe be a little bit fearful, right? Counter indicators just let us know that other people are feeling a certain kind of way about the markets, and so we can make our plans to do the opposite of what everybody else might be planning to do based on that fear. Again, this was a really quick solution to me having really sweaty armpits, so I just grabbed an old t-shirt and cut the sleeves off. This is dude fashion. This is just how we do it. Now I'm going to let you guess whether or not I'm wearing pants today. I mean, we'll leave some things to the imagination, right? For what we do reveal, we'll leave other things to your imagination. But disclaimer, this is not legal, financial, or business advice. I'm not trying to tell you whether or not you should buy coins or exactly when. We are talking about a 30,000-foot overview of markets and Bitcoin price action. So take that into account that this is just another data point for you to make the best decisions you possibly can. If you know you need professional help, then get professional help and pay for professional help. Put it on the record. Write that off at the end end of the year as a cost of your investment strategy, and then hold them accountable for the advice that you get. Right? So, but don't take any old data point that you see on YouTube as the free advice that's going to make you a millionaire or billionaire. That, I think, is probably not the best strategy for anyone, right? Typically, you get what you pay for. Sean C. from New World Crypto is in the chat, says GMMYB. Hope everyone has a great Thursday. Make today count, and don't forget to be awesome today. Much appreciated. Love the positivity, Sean. Can't wait to see New World Crypto launch, right? We need more good content creators. We need more good actors in the space. I think, Sean C., I'm looking forward to seeing what you bring. Let's jump back into today's content, though, and take a look first at Crypto Bubbles. This is a really good overview of the markets. I know it's like visual aids are so much easier to work with, especially when you're talking about markets. So we want to get that high-level overview first. And it looks like Luna Classic is undeniably gaining, right? As much as it pains me to say it, as much as I wish it were not one of our top gainers, it just is. People are speculating on Luna Classic. What does this mean? Well, I hate to go to Weimar Republic and, looking at former economic crashes, right, from the old world and from throughout history. And I'm realizing, guys, I seriously look like I'm like a member of Public Enemy or something right now. Yeah, right? Fight the power. It's a great look, I think. Whatever, maybe I'll keep it. But when we see people speculating on some of these cryptos that are not great in their fundamentals, usually it means that markets are really bad and people are really desperate because of the failure of whatever their currency is. The dollar is no exception. We're seeing the dollar absolutely get decimated, absolutely, die of old age, right? And of cancer, right? Toxic lending, toxic subprime mortgages. We've been seeing this for the better part of 20 years now, since the dot-com bubble all the way up to today. It's appropriate, right? If we could show just .coms here, it'd be great. Shooter McGavin says, "Swole, baby." Hey, appreciate that. I'm just trying to get it in, guys. Just trying to get the workout in. If I've got any kind of physique left over, it's from the workouts I've done over the last quarter of a century, right? I've been getting it in since the mid 90s. Just saying. So just trying to keep a little bit of consistency there, but appreciate you. Thank you so much. Especially as an adult. I'm not going to make it about guys versus girls. Everybody's got to get it in. You have one corporeal experience, and then when the ride's over, it's over. Why not make it worth the time, right? Why not make it the best ride you can possibly have in your tank, your brain tank, right? Your meat suit. That sounds really, really awful. It is, we'll talk about the metaphysical experience and the divine later on, but still, the reality is you get one body. You should probably treat it well. So Luna Classic is what people are speculating on. Cosmos, I think, is what people are actually investing in if we're looking at the broad separation between speculation and investment. Same with Algorand. Zcash, I think people are a little more excited about. Ethereum is starting to push upwards again, rally. The BSVers are out in force, basically saying, hey, we think this is the real Bitcoin. But same with Bitcoin Cash, right? We got these alternatives that people are really excited about. Some of the other projects that have strong fundamentals, right? Link, EOS, which did not fail when Luna failed. EOS, which did not have validator resets when Solana had validator resets, it's back up because I think it's from the fundamentals. Ethereum Classic as an alternative to Ethereum, also pumping at about 300% greater rate than Ethereum is. And I mean, people are getting excited about this rumor of the merge being a really positive thing for Ethereum. So how much better is it for Ethereum Classic to A, have never rolled back their chain, B, be able to run all the smart contracts that Ethereum does, and C, be maintaining proof of work. It's a very strong investor narrative, and a lot of the GPU miners that I know are as bullish as ever on Ethereum. Why wouldn't you be? If you're a fan of proof of work, why wouldn't you be more bullish on Ethereum Classic than you are on Ethereum? I think it just makes sense. Near Protocol doing well, Cake doing well, ICP even doing well, and Quant doing well. Ton Token also in the mix, and Dash. So you got a lot of these plays that people have been properly invested into. Litecoin, even Helium is coming back up over the last week. So market caps are seeing some recovery in a lot of other projects, but notably absent is Bitcoin. Where is the king? Huh? Let's take a look, guys. Let's take a closer look. Chart shows us right now, and these are the free tools over on tradingview.com. This chart is totally publicly available. Crypto McKell in the chat saying FA, fam. And what does FA stand for? Stands for freaking awesome. We got a family show over here. I don't actually say that word, but freaking awesome stands for freaking awesome. Appreciate you being here, brother. Appreciate you hanging out with us over at the Mind Your Biz live stream. We only do this twice a week because that's what I have time for right now. If I did it 5 times a week, if I did it 6, 7 times a week, that'd probably be better. But man, only 24 hours in a day, one life to live, and I gotta diversify my time a little bit more because I didn't quit my day job. I got more day jobs, and I specialized in crypto. So there you have it. Crypto professional, full-time, feather in the cap, not financial advice because it's actually really, really hard. there you go. That is not career advice. It's not for the faint of heart because it's not like a regular job, not banker's hours. All right, so our chart over here on TradingView, this is publicly available. I'm fortunate enough to have a side-scrolling mouse, so I can just do that little motion right there. We are nowhere near the value buy, right? The blue line value buy levels, but we are moving down, and we are moving down according to the channel that Mind Your Biz defined. The chopsticks, which we broadened a lot to just say, hey, that's kind of the trend, actually. Bottom to bottom to bottom, roughly, chopping through that. A little bit of chop right there. Top to top, that broad range right there. We're still kind of performing in that broad range. And yes, we do have the ability to move to the downside. Yes, Bitcoin can go down to 14,000. Yes, it can go down to 11,000. Yes, it definitely can go down to 5,000. I don't think we're going to see $5,000 Bitcoin again. That's a pipe dream. It would be amazing, right, to be able to buy multiple whole Bitcoins or get, if you're not a whole coiner, to get that much closer to being a whole coiner, and then you just sock it away. Not an investment strategy here or advice. Some people are thinking this way, though. I know I do, where it's like there are 21 million Bitcoin, 7 billion people on the planet, and right now there are millions of active wallets. So, even with 21 million Bitcoin, for you to have just one still puts you in a much better position than the majority of other wallets and holders. Glassnode confirms it too, that it makes you like a top 30%er, makes you like a top, I think, 20%er to have one full Bitcoin. So even amongst just Bitcoiners and active wallets, having one full Bitcoin is a pretty solid position to have, especially if you anticipate that it will do really well in the future. Buy it cheap and write it out. Like people who are amassing tons of Bitcoin, cool. But in my mind, it's not the investment that's going to return those massive mega multiples in the next bull run. It's going to do okay. It's going to do fine. It's going to be unconfiscatable. But it's also highly surveilled, right? Like every 3-letter agency here in the United States and internationally has their sights set on Bitcoin, and they know how to track it better than any other asset. So you got to know what you're getting yourself into. The Whirlpool CoinJoin implementation has not been targeted by OFAC yet, by the U.S. Treasury yet, but if they targeted Tornado Cash, they might want to target that next. It is a reasonable assumption to think that they can do it, that they've got the capabilities to do it, and that they're crazy enough to put it on a list, right? Even Coinbase is starting to push back against the U.S. Treasury based on what they did to Tornado Cash. It makes no sense. It really doesn't, because Ethereum is still a very highly traceable network, even with Tornado Cash. You can do timing attacks. You can absolutely measure the traffic, but you should be able to port some of it from one wallet to another, make it portable, and make it refungible. Anyway, but I think our Bitcoin chart is kind of showing us right now this is a daily chart, and we just have a simple MACD down at the bottom. We are still in a bearish convergence. We're just bearish divergence here, right? The histogram still shows bearishness. Could it flip to being bullish again? Maybe, but that little mini trend right there is still down, right? We have gotten caught for a couple of weeks now in a downtrend, and I think that we may continue to see that. Do we see a breakout to the upside on the chopsticks? Sure, maybe, But yeah, there's just not, I don't think there's any reason to doubt that we're going to see more downside in the Bitcoin chart. And Shooter McGavin brings up a phenomenal question I'm so glad that you asked. Shooter McGavin asks, please hit on Hex and Pulse, bro. I can't seem to find any valuable info on the Pulse chain release. I understand development takes time, but the delay appears to me to be stalling. And I appreciate that you ask, right? So Pulse Chain is one of those highly anticipated coin releases. Let me get through some of our news and just know that I've got a full animated explainer on this channel, the new Mind Your Biz channel, which I'll link to in the description of this video after we're done. Thanks for asking that question. I got you, fam. We've got the fundamentals of how it works. Think of like Finematics or Whiteboard Crypto. They failed to cover Pulse Chain, but I did. I created a whiteboard video that's animated just to make Pulse Chain easier to understand. So let me link you to that because I felt so strongly about it, and I knew that the coverage would be suppressed, so I made that. It's an easy, objective way to take in that information and not worry about people being maxis for one coin or another or for a network. I think it's pretty level-headed and just no nonsense and straightforward. As far as the release dates, it takes time, as you said, and we'll touch on that I think probably after the Ethereum merge. So one crisis at a time, right? Like Ethereum is having its merge, and I don't anticipate there will be big Pulse Chain news until after the merge is complete. Just my gut feeling that on the matter. We're not going to see much by way of like updates there. But that's our chart, guys. I don't see any need to update our chopsticks. They're very broad right now, and this is just a very, very sloppy range that we're operating in. We do fundamental analysis here. We don't get into the technicals because the technicals are BS. Right? We don't want to worry about that too much. For us, we don't understand the tools well enough. We're going to get wrecked trying to do it. News. Celsius manipulated their CEL token to bolster the balance sheet, a legal filing says. This is over on protos.com. And links to this will be available after the live stream is complete. Not able to get them into the show notes before we went live today. Let me pop that text size up for you. But the Vermont Department of Financial Regulation said that regulators were concerned that as early as 2020, Celsius was paying yields to some existing investors with the assets of new investors. So they were playing the shell Ponzi game in 2020. Ooh, doesn't look so good. But the revelation originally arose out of a meeting of Celsius's creditors on August 19, 2022, and is now public by way of court filing. According to the Council for Vermont Department of Financial Regulation, their CFO admitted the company has never earned enough revenue to support the yields advertised to its customers. That, by definition, does put them in the category of being a Ponzi, right? A Ponzi. Oh my gosh, you guys, thank you for sharing this stream. I see we've got a massive pop in viewership. Wasn't even paying attention. Sean C. says, make sure to smash those likes. That is advice. That is... maybe not financial advice. Cursed Mining is in the chat, says, hey, yo, good sir. It's great to see you, Cursed Mining. And I hope you are able to make it on September 10th with the miner roundtable that Serpent X Tech is arranging for the GPU mining community. I would love to have Cursed Mining on that roundtable. Great content creator. In my opinion, not active enough. But, you know, we can't always have our favorites. Good to see you in the chat. But taking a look at this regulation as we go, guys, it looks like this public filing is making it a little more obvious that, yeah, Celsius was essentially running a textbook Ponzi. Ouch. That's a real bummer because a lot of large-scale mining operations used the liquidity of Celsius's platform to take out crypto-backed loans so they could run their mining operations without creating sell pressure on Bitcoin or on Ethereum or any of these assets that they were mining at scale. That's harder for us to understand at the small to mid-scale mining operation, but a lot of us, there was no approval necessary. If you had maybe a couple $100 or a few $1,000s in power bills that you wanted to pay off, why sell your crypto when you could borrow against it? See, the logic, I think, it is sound if you expect for the price to go up. But Celsius did not collateralize those positions well enough, and here we are with them not earning enough revenue and admitting that it's essentially a Ponzi. And so, how did they make up the difference? By inflating the value of the CEL token that they used, the CEL token that they used to pay out those rewards. Bummer. A lot of different asset classes overinflate the value of their tokens, of their ticker symbols. We definitely see it in the traditional markets. We definitely see it right with stocks. That totally happens. But I mean, in crypto, it's just so much is on chain, so much is transparent that you can't just get away with that. It's not something that people will tolerate. So moving on, we've got regulatory news, and this is what you came here to see. I guarantee you this is why you're here, is based on that. Hey, thanks for smashing that like. Appreciate you guys bringing in those likes. Smash that button, make it explode. Again, this is advice. It's social advice. That's a thing. So Gary Gensler, as Wendy O calls him, Daddy Gary. That's so weird. I mean, she's right, though. It's like, right, like regulate us harder, Daddy. They want us to beg. They want us to beg for it. It's bad, but that's why we're talking about this, right? This is making the news. They've got all kinds of other scare tactics. They're trying to make us talk about some of these failures more, so that when news like this comes out, when guys like Gary Gensler say, we need to regulate this, we say, you know what? Yeah, he's right. We need to regulate this. Think of the retail investors. They're going to get wrecked. Yeah, they might get wrecked, but crypto is dangerous freedom. And you should have the freedom to get wrecked in the same way that you have the freedom to go and do crazy things that are dangerous, right? Like you can jump out of a perfectly good airplane with a parachute on, right? Legally. They'll let you do that. There's no law against jumping out of an airplane, right? With a parachute on. Like, you can totally do that. Dangerous freedom. And I love it. And that's why I'm here in crypto. But he says that the CFTC wants them to have greater authority over crypto market as long as it doesn't take away power from the SEC. What? What earthly sense does this make? So he wants enhanced regulation from the CFTC as long as the SEC can also have enhanced regulation and insight into these markets. It's one big club, right? George Carlin said it's a big club and you ain't in it. That's what they're trying to say. Right? You got these other characters that on Capitol Hill have been doing insider trading for years now, possibly decades now. They've grown their net worth into the tens of millions, just below the threshold they say that you need to increase your tax bracket. And then they've used every possible loophole in the book to ensure that they have the lowest tax liability possible. But all of us, right? And we transfer more than $601, right? We've got to report that to the IRS. And if we get involved in any cryptocurrencies or anything that's a highly performing asset, we got to report it to these guys. And it's one big club, and we ain't in it. Yeah. So, but worse, they're working this news cycle to get us to beg for the regulation. Not a good look, fam. We need to lobby for something different. We need to lobby for something better. But that's Gary Gensler. We'll just say no thanks to that. Really appreciate that they're trying to get that to go. Support Congress handing more power to the CFTC to regulate cryptocurrencies specifically. And he says it's important to strike a balance with regulatory oversight given to the CFTC and ensure it doesn't inadvertently undermine securities laws, right? So they're trying to figure out right now. They're basically admitting that they've already conquered this market and they're trying to divvy up their territory. Chainalysis and groups like it have basically handed the keys to the kingdom over to the regulators, and now they're just trying to figure out, cool, how do we divide the spoils? How do we divide up all these goodies? So I'm not very happy about that. Tell me what you think in the chat. I see that our likes are still pretty low, guys. Come on, let's smash that like. Let's do a like off. Is that a thing? Everybody smash like. Can you smash like twice? Is that a thing? Does that exist? I don't think it does. But Gensler showing up in the news cycle again like a bad penny. This guy just keeps turning up. Says he wants CFTC oversight for non-security cryptos. The summary over at Ethereum World News is that he supports Commodity Futures Trading Commission having more regulatory oversight as long as they are non-security cryptocurrencies. But the question is, who's going to determine what that is? Because the SEC hasn't been able to figure out what is not a security in cryptocurrencies, and they keep on trying to argue that every other cryptocurrency is a security. So make up your minds, what's a security and what is a commodity, and what is just property, right? Like we can't seem to get an answer between the CFTC, the SEC, and the IRS. And then how do we label any of them as income? I wish we had answers to this. I kind of also wish they would just step off, because we're making gains and changing lives, and we're doing so just before the dollar completely fails, which is necessary. I think, again, going back to our cryptobubbles.net chart right here, we see the biggest gains are in some of the most speculative assets, right? Luna Classic, Raven, which to date still has no real use case. Vincent Gallo hops into the chat and says, thanks again for link. Vincent Gallo reached out to me via email. Guys, I'm being dead serious. I try to make myself as accessible as possible. DMs are open on major platforms, and email address is public, right? Over on the description of the channel. He reached out, asked for a couple of links that I talked about on the last live stream, and I said I would not list publicly, and that is for very specific reasons. But went ahead and sent those back, and you are welcome, sir. You're always welcome. When I extend that invite, I mean it. Accessibility is important to me. That's why I go to live events. That's why I'm invited to go speak at live events. Speaking of which, I'm confirmed to be speaking at the Decentral Conference in Miami late November of this year, and I will be there for Art Basel Week or for Art Week Miami. That's an extremely important thing to me. I know it's kind of strange. We talk a lot about mining and other cryptocurrency concerns or other blockchain concerns on this channel, but the arts are actually kind of important to me. I was in the performing arts for a number of years, and that's how I met my wife, and that's something my family's been involved in for a lot of decades, and something that my siblings are still involved in is the motion picture arts. So this is important to me, and yeah, I'll be there for Fine Art Week and be doing some other things kind of in that area for a while, so stay tuned for updates there. It's a very important thing. I think being well-rounded is, the other challenge in life. Got to get it in, got to take care of your body, but man, you got to take care of your mind and your spirit, your soul. The arts help in a big way to round off anybody's personality, in my opinion. But Gensler showing up, right? The SEC currently has several probes into crypto companies like Coinbase and Ripple over possible security law violations. And reaffirmed that some altcoins remain securities and must comply with SEC policies. That's a cool story, bro. You mind giving us an exact list of which ones? And then can you prove it in a court of law? Will you please prove it? Because to date, we keep talking in platitudes, Mr. Gensler. We keep talking in absolute platitudes with no real specificity. You can't seem to prove that Library, LBRY, is a security, and I sincerely hope that not only you lose that case, but that they countersue and they take you for as much as they legally can. Same with Ripple Labs. I'm not even a Ripple Labs holder. I don't even care about XRP. I just want them to sue the pants off of the SEC when they win that case. I want them to countersue and just take you guys to the friggin' cleaners. Jerome, guys, now I'm going to tell you how I really feel. Jerome Powell is also in the news. We need legislation on stablecoins. Do we, though? Do we? Okay, here's a quick take from theblock.co. Federal Reserve Board Chair Jerome Powell called for stablecoin legislation during a conference appearance on Thursday. Powell's comments come after a push to release a draft stablecoin bill failed over this summer. Haha. Yeah, pretty much. That should be the case. You should fail because you guys don't ever think through this stuff, or you put it into giant omnibus bills where we just kind of chuck it into the back seat and you just hope that people won't notice. Guess what? We have lobbyists too, such as Coin Center, and they do read this stuff, and they are forced to basically scan through all of the legislation just to try to pick out some of the keywords that you've hidden in a 7,000-page document. So, yeah. It's crazy. We know that really exotic tech, right? grep and find and replace. Even a monkey can do it, right? Control F. Sorry, guys, we foiled all your plans. But yeah, that bill failed. Thank goodness. But Jerome Powell won't let up. He thinks that it needs to be regulated in much the same way that the U.S. dollar needs to be regulated. Now, here's the thing. I'm open to differences of opinion. I want to hear people who have differing opinions. I want to be open to discourse so I can learn new things. Can you give me some reasons that you can think of that stablecoins should be regulated in exactly the same way as the US dollar? Because I'm not seeing it. I don't understand that. I think that it's literally just a peg to keep like and kind in your crypto portfolio so you can make trades. Algorithmic stablecoins maybe shouldn't fit this description because they themselves are speculative, since they have a collateralized debt position. The good ones have a proper collateralized debt position. I don't think they should be regulated the same way as the U.S. dollar, because the U.S. dollar, you don't have to surrender your car to get U.S. dollars. You don't have to surrender any kind of collateral to obtain U.S. dollars. So why would you do that for collateralized debt positions and your algorithmic stablecoins, properly created algorithmic stablecoins? No, Jerome Powell, you're wrong, and you can join Gary Gensler over in the corner and wear a little dunce cap. Okay, that's all I got to say to you, sir. Well, virtually. I could never say that in a real forum or on a real broadcast or on TV because I don't know. I haven't tried though. Should I try? I should probably try to use that quote somewhere on TV, shouldn't I? All right, challenge accepted. We'll try to get on TV so I can call Jerome Powell a dunce and Gary Gensler are dunce. That's the thing. They're not unintelligent guys. They're just, I think they're making the wrong choices here. Crypto needs strong oversight, says the U.S. Treasury. The U.S. Treasury's in on it too? Yup. Yuri Molchin gives a little bit of an overview here, saying cryptocurrencies pose threats and risks to investors, and they require strong regulation. The U.S. Treasury is expected to share it in its report. So, yeah. They've got a report that's going to highlight the economic danger from crypto and stablecoins. Yeah, you guys go ahead and do that. Why don't you also show how poorly money in the bank has been doing over the last 2 years? Why don't you tell us exactly how poorly the U.S. dollar has been performing on your watch? Why don't you put that at the top of your report and then bookend it on the bottom of your report and show how poorly the U.S. dollar has done and the median income has done in this country relative to the median home value, median house price? Why don't you go ahead and put that in the report too? Because once you do that, maybe we'll understand and have the proper context for knowing why so many people are involved in this highly volatile market of crypto and stablecoins. Maybe everybody will understand why everybody is flocking to crypto and stablecoins while you're trying to give new subprime loans to black and brown colored people in this country. You're trying to sell cheap, toxic loans to black and brown people in this country. Because this is yet another bait and switch. It's yet another rug pull. I'm getting strong 2007, 2008 vibes from you guys, and you should all be ashamed of yourselves at the U.S. Treasury because you're protecting no one. You're getting retail wrecked all over again, and the fallout is going to be even worse than it was back in 2008, 2009. I had boots on the ground, right? I was there in the streets. I felt that burn. I had kids that I needed to provide for, and all you jokers, all you regulators, you let that crap happen. And now you're letting it happen again, and you're trying to blame cryptos? Nah. Fool me once, shame on you. Fool me twice, shame on me. Ain't happening again. Indian finance minister urges the IMF to lead crypto regulation. What? Okay, so I'm going to say something that sounds a little bit controversial, but most Indian people I know are very, very intelligent. For whatever reason, their government is not the brightest. They're not the most intelligent. They've been trying to overregulate cryptos for years now, trying to push cryptocurrency out of their country, and now they're inviting the IMF in? You're inviting the fox into the hen house. Why would you invite the IMF to meddle in your country's financial affairs? That's it's not going to end well. It's really not going to end well. To give some context to the Mind Your Biz community, the IMF, or the International Monetary Fund, was the group that was invited, that warned El Salvador, you can't accept Bitcoin as illegal tender. You can't do that, or you might not get our support anymore. And El Salvador basically said, mining rig go brrr. And then they went and harnessed geothermal power from a volcano to mine Bitcoin for free. Yeah, the IMF is extremely toxic. When you talk about international toxic loans that are designed to keep developing nations in that snapshot of having to continue to develop, the IMF, they are the Bond villain. The IMF, they loan out so much money to keep these impoverished nations impoverished. It's not even funny. Read the book Confessions of an Economic Hitman, and you will understand why the IMF is so dangerous. The United States is party to it as well. We, in this country, we extend a lot of toxic loans internationally to our partner countries, our partner nations, who we then magically seem to turn into enemies later on. See also most of the Middle East. We created those problems, right, through our toxic loans and through our false promises of partnership. It's bad. Gandalf Great jumps into the chat, says, Mind Your Biz, I think they should totally regulate stablecoins because who could better destroy that whole side of crypto? I mean, sure, there are some sides of crypto that probably need to just organically die off. Regulation would do that in a less organic way. It's kind of like watching a Big Mac be left out on the counter and seeing how long it takes to mold versus leaving just like fresh baked bread out for a couple of days to see how long it takes to mold. It will be unnatural and unholy as soon as we get the IMF and all of these other three-letter agencies in to regulate stablecoins. Just not the same. Not the same at all. But India, what are you guys thinking? What are you guys doing? Indian members of the community, I don't know how many we have actively right now, active on the Mind Your Biz community. I know certainly we've had more in the past in the international Mind Your Biz community. But y'all need to check your people. I'm just saying, you need to really, really rein that in. But finally, a ray of hope. A ray of hope. Maybe just a voice you should listen to. Finbold talks about Robert Kiyosaki, or the so-called rich dad from Rich Dad Poor Dad, warning that Biden's crypto order, right, the executive order to get more regulation into crypto and to create a subtask or a task force, it correlates to Orwell's totalitarian vision in 1984. This man does not mince words. But James Rickards, former advisor to the Pentagon, White House, Congress, and the CIA, and the Department of Defense, or the DoD, joined the author of the personal finance book, Rich Dad Poor Dad, on the Rich Dad podcast on March 9th to discuss the order, labeling it as spyware. This would dramatically expand the power and influence of the federal government, essentially acting as a new type of spyware. And that's when Robert Kiyosaki said, Jim, this is like George Orwell's Big Brother is watching on steroids. That's not even a strong enough analogy. We absolutely need to resist some of the proposed regulation. We absolutely need to resist CBDCs. We absolutely need to resist spurious regulation of stablecoins, and especially algorithmic stablecoins if they have the appropriate collateralized debt positions, right, to create those stablecoins in the first place. DAI is hopefully going to make it, right? MakerDAO is hopefully going to make the right decisions with MakerDAI, right? The DAI stablecoin. It's not the best bet in my opinion. There might be some others that are doing better. And then, of course, we need assets that are going to outperform inflation, because right now the dollar ain't looking so good. So keeping our portfolios ahead of inflation is going to be a trick, right? If we're dealing with any kind of a stable coin at all. Gandalf Gray says, mind your biz, you should do a WTF on Son of a Tech. I don't even know what a WTF is. I apologize. One life to live, guys, 24 hours in a day, and I have paying clients that pay for my time. So while I'm sure Son of a Tech's channel is doing well right now, I don't watch as often as I used to. I struggle to make time to consume content in general. Not even just his, just in general. Very hard to consume content these days. But taking a look at our current transfer fees, guys, we got on the Ethereum network, get rid of the latest block, pending transactions, look at the median transfer fee, look at the median contract fee, and then look at our median gas price on Ethereum while that's loading up. Looks like transfer fee is over $1 right now. It was under before. And looks like the median contract fee is about $5.50. Over on Bitcoin, the median fee is still close to that 40-cent mark at almost 50 cents. And we have sats per VByte 13, a little bit higher than I like to see on Bitcoin, but you know what? It's workable. It's still working, and people that want to work in the Bitcoin ecosystem can continue to build. Is it the true Bitcoin? Right? We're going to eventually have that conversation about BTC versus BCH versus BSV versus BTG, right? On GPUs versus 0x Bitcoin versus all the other derivatives of Bitcoin and the BTC ticker symbol. I can't answer that, right? But I am going to say that I don't think it matters who Satoshi really is. I think I have a solid idea I think I have a solid idea of who Satoshi isn't, but yeah, you tell me in the chat. Does it even matter anymore? I think what matters is that BTC, the ticker symbol, won back in 2017 and 2018, but through the court of public opinion and media love. So this is what I'm going with. Anybody who thinks otherwise, I don't even know how it's still a question, but some people still question it. Gandalf Gray says, who the F is so at on my channel? You know what? As a creator interview, Matt is a cool dude, and he's got a lot going on, and he has done a lot in this space and a lot for this space. I'd be happy to do that at some point. We'll see if he can make time for that. I think he is still just doing full-time media production, so maybe his whole schedule is only devoted to this sort of thing. Maybe we can make it work. But I think also I'm going to give you guys a sampling of people who are outside of the GPU mining space, because we're going to find out very, very soon that as a content stream is not enough. Yeah. Sorry, I'm just going to say that for what it is. That as a content stream is not enough, and I saw which way the wind was blowing quite some time ago. So, yeah, we'll see if we can get Matt from Son of a Tech over here. Sorry, he goes by Blind Run, right? I think is his stage name. But, yeah. All right. Moving on. DeFi Llama. Ethereum still at 58% in general without any other stakes or derivatives. Tron, BSC, Avalanche, and Polygon. Avalanche is edging out Polygon in that stacked ranking with more protocol support than it's had in quite some time. I think there's been a little pop there. According to protocol support, the stacked ranking doesn't change that much, and I think this is validating the approach that I've been talking to you about for the better part of half a year. What did Uncle Seth tell you? I told you that protocol support leads to TVL, and I stand by that, right? TVL is important. It's not everything. It's important, though, right? It is the lifeblood of a given smart chain. So, Hack Crypto in the chat saying, everyone smash like. I think that's great advice. And I appreciate y'all being here. It's great. So, current stacked ranking, though, when we go to protocol support, definitely puts Polygon as much more of a contender. It is that TVL that is shrinking on some of these chains. And I wouldn't say it's consolidating on Ethereum. I think with Ethereum, it's definitely staying pretty level right now at a little over $30 billion, and it's decreasing rather over time. The market cap versus TVL figure, I love that this is included on DeFi Llama, but I think it's a false metric when we look at platforms like Ravencoin. I've said it in the past, Ravencoin does not have a roadmap to include DeFi. It cannot have a roadmap to include DeFi. There is no smart contract programming language. You would need to port something like RSK or Stacks from Bitcoin back over to Ravencoin to help it fit that requirement. And that's not on the roadmap because it's really difficult. So what we're seeing right now, this is a false metric. While you could maybe fit a bunch of additional TVL into their market cap, there's a reason that it only has a little over $1,000 of total value locked on this chain. And that is because the NFTs and the assets that are issued on top of Ravencoin, the so-called NFTs, and then the assets that are issued on Ravencoin are not recognized as useful for DeFi. Ravencoin is a cool project. It's very cool. I've been telling you for quite some time that it's not quite as useful as people think. So cool story, cool trick that it does in the wallet client to be able to mint little limited edition assets. But I think, in my opinion, this is not the horse to bet on for long-term hodl or long-term value. Unless they can make a change there. Cosmos Hub, I think, does have far more potential, possibly. But even still, the TVL that's locked up on Cosmos Hub is because of their IBC protocol that allows people to transfer just coincidentally onto the Cosmos Hub. They have got a huge architectural problem there, and so we're not going to see that TVL grow into that potential market cap figure very soon, anytime soon here for Cosmos Hub. Doge also shows a very interesting figure here. And if anything, this is an indicator of what the possibilities are for Doge Chain. Yeah, you heard me say it. You guys heard me break it before anybody else did. Doge Chain. Now, do I think it's going to become the future? No. Can you wrap Doge and put it on other smart contract networks? Yeah. There are alternatives to it. But I think this is what the makers of Doge Chain were looking at when they said there's a huge opportunity for people to wrap their Doge and then use it as a gas, as the gas fee, right? As the gas utility token on a chain and make it inherently useful. They really caught on to something that nobody else was even looking at. What is the Schopenhauer quote? That talent hits targets consistently. I'm going to paraphrase here, but genius hits targets that nobody else can see. And right now, I do think it was kind of ingenious that somebody decided to make a chain based on that little ratio right there and the possibility there of this massive market cap, right? Billions of dollars market cap, bringing more value onto a chain that's a smart chain. It's pretty cool, right? And here in this view, it shows the potential to do even more adoption than Ethereum Classic currently has. Do I think that's going to be the case for long? No, I don't think so. I think Ethereum Classic has more legs, a better roadmap potentially than Doge Chain. But this particular view does give us an inkling of what could happen in the future. And there may already be, if they include Doge Chain here, I might talk to the Doge Chain team and have them do a pull request so they can be included on this list, because this is open source and you can just contribute openly. But see if we can get it included here in this stacked ranking on DeFi Llama. What do you guys think? Mind Your Biz community, should your boy do that for you? Can we do that for the community? Can we do it for the culture? I think we can. I think I'm going to try. So Ethereum Classic also showing about 5 protocols and a bit more TVL, but that high ratio ahead of it to build more. Litecoin shows up on the list, also a really high ratio, but nobody is really building on top of Litecoin in quite the same way. Ethereum Classic has got years of Solidity code that can be ported over with no difficulty. Bitcoin, false metric here, right? We've got RSK, we've got Stacks, we've got other protocols that are built directly on top. OmniLayer protocol might be listed here, but Lightning Network, I don't think is enough, right? Boring DAO is cool, but it's, again, cross-chain. See, like, I don't know that cross-chain bridges and platforms count for quite the same thing. You do need DEXs. You do need volume. You do need real investor interest in yield-bearing platforms. So that's a false metric. RSK and Stacks would be a better metric, in my opinion. Library, also false metric. Smart BCH, is that funny? That the Bitcoin Cash derivative has more, the Bitcoin Cash smart layer has more going on than Bitcoin does. Fancy that. All right, guys, cost to mine one full Bitcoin. Let's get into a proper top of the line piece of hardware here. Let's go to 3,500 watts right there. Let's get a pool fee, which we are now including when we talk about this. And at 5 cents, you're looking at a $10,000 Bitcoin. Is that realistic? Nope. But 8 cents is across town. If you just cross the tracks, make some friends. Let's go to 7 cents and see what our cost is. And now we're talking, right? Now we've got a $14,000 Bitcoin that I think you can be proud of this time 2 years from now. We might hit bottom support a little bit below that $14,000 mark. But if you're not mining with that level of efficiency on that price of power, I think you're going to be uncomfortable for a while. I think you have to cross this threshold to be comfortable in your Bitcoin holdings that you've mined either at home or at small to mid scale. So just be aware of that. Let's take a look at our cost to mine all other coins. And apologies for the laser mode here. Let me flip into dark mode there. I'm going to have to recalculate at 14 cents per kilowatt hour power. And I realize that I'm talking about two different possibilities here. You can be profitable on the GPU right now, even at home with an average cost of 14 cents per kilowatt hour. You can't be profitable on that same cost for power when you're on an ASIC. It's just not doable. You don't have as many assets to potentially run over to. But Ethereum is still king daddy of GPU mining, not going away until it goes away. Some other notable coins are, well, NiceHash, unfortunately, Conflux, and then Ethereum Classic on a few specific card profiles. So we're going to keep seeing that, I think, for a while. We're going to, it seems obvious, see Ethereum Classic's hash rate grow and potentially see that price action move up so it maintains profitability. Flux, thankfully, also showing up on this list. Great utility that they're offering. Not as much flexibility in terms of a smart contract platform as Ethereum Classic. But here's the irony. Here's the funny thing. You can run an Ethereum node on the Flux network. When it goes to proof of stake, you can run a validator and a node. Well, maybe a validator, but definitely a full node on the Flux network as soon as Ethereum goes proof of stake. Or you can run a node now on the Flux network instead of hosting it yourself and doxing your own IP address. Bitcoin Gold is showing up. Beam is showing up. You got, more Bitcoin Gold and Beam, Zero and Ion as well for the older card profiles, but they are not in the money anymore. At 14 cents per kilowatt hour power, quite a bit that's fallen out of profitability. Let's use the same metric as we had before and go to 7 cent power on these cards and see what that does for our portfolio. A lot more profit, right? Gets us over the $2 mark for all these different card profiles. And then if you can, get your rigs placed somewhere across the train tracks. Don't go and get yourself into a toxic rental agreement or a toxic utilities agreement with the power utility. You're going to regret it before too long if it's just you. Even if you have, several kilowatts of mining rigs or tens of kilowatts of mining rig going simultaneously, you're going to get caught in the financial rope-a-dope, right? You'll be on the line for a utility contract or for a rental contract that might outlive your desire to mine at that scale or in that way. So don't get yourself caught. Try to partner with others who can scale their power requirements up based on a contract they already have. Been saying it for a while. Go make friends. Don't try to be a lone wolf. it's going to make it very difficult for you to continue to do this, even as a hobby. All right, so that's how you're going to get that 7 cent per kilowatt hour power for your GPUs. And you see the difference right there, right? Night and day. Makes so much more money, makes so much more profit, rather, when you have that 7 cent per kilowatt hour power. Taking a look at our portfolio, I thought we'd be able to do a deeper dive today. I don't think we're going to get to it today. Might have to open up a Saturday live stream. Not something I typically do, but I will check out with the other GPU mining channels to see whether, to make sure that I don't step on anybody's toes, but possibly an early just portfolio overview, and maybe it's not a live stream, maybe I just publish it. And then, of course, Saturday night, September 10th at 8 p.m. I think we're going Eastern Standard Time. We will have the miner roundtable, so look for that. But let me jump back into just a portion of our portfolio. GPU mining, very top of the list is Flux. Take a look at our stables. Again, this is one of those things that I think is really important for us to very quickly check into. And we've got some runaway price action on Terra Classic USD. What's going on here? Well, we already saw that Luna C, or LUNC, has got some growth this week. And so, of course, there's correlated growth here in USTC. If you were speculating, you kind of needed to speculate on both, I guess. And you would have had a 40% increase this week. Am I condoning that? Am I endorsing that? Hell no. It's dangerous, right? But it's dangerous freedom. And if you think that's the kind of risk you want to take, then pay attention to some of these outliers, right? Pay attention to some of these speculative plays. But that's our stable side of the portfolio. GPU ETH replacements. Let's cut to the chase. Because we're looking forward to this merge finally happening. We've got Ethereum Classic at the very top, still with a $5 billion market cap. That 12% pop, put it over the $5 billion mark. That makes it more than 10 times the liquidity, more than 10 times the available market cap for you to mine into and dump profits, if you have to, versus its nearest competitor, Ravencoin, and well over 10 times, closer to, gosh, what do we got here? About 15 times, nearly 15 times the profitability or the market cap of Flux, and that just maintains that multiplier against all of its other competitors. Ergo, Flux, Ethereum Classic, and Ravencoin really are going to be, I think, probably the biggest beneficiaries of hash rate after we see that proof of work change. But keep your head on a swivel. Look for stuff that is profitable, not just stuff that has this high market cap. That's the game that the institutional miners have to play, or that the mid-scale miners have to play. And this is where nano cap speculative mining and mining at home could potentially help you get higher multiples. Now, in smaller amounts, but higher multiples for the amount of time that you're mining. All right, dudes and lady. There could be one lady in the audience. It's always possible. But but I think that's about our show. Let me check for some other comments here. We got some hellos. Crypto Mikkel is in the chat as well. Good to see you here. And then Vincent Gallo says, LUNC, cute, but who has the multi-sig? That's always the question, guys, to various bridges and stuff. We live in a world full of compromises right now with cryptocurrency and the relative centralization of a lot of these networks. So good questions to ask. But if you are going to speculate, keep in mind that you have to speculate and get your profits out as quickly as you can. It's also a minefield right now. So if you're going to speculate, cover your butt and make sure that you do get your profits out right away if you're going to go there. Mostly though, I would strongly urge you to, really try to be secure. Keep your own multi-sig, keep your own vaults, keep your own hardware wallets, keep your coins definitely off exchange, with some of the shenanigans being played by FTX, by Coinbase, and by the regulators who want to try to more tightly regulate those centralized platforms. The way you stay safe and not wrecked is by staying off of those platforms. Appreciate you watching all the way to the end. Appreciate you smashing like. Oh my gosh, smashing like. Where did that come from? And being subscribed. You're the reason I make this media. I love your face. Remember to stay private. And until Saturday, when we do our miner roundtable with so many GPU mining greats such as Crypto Mikkel, DCA Adventure, Red Panda Mining, Son of a Tech, BBT, and of course the man himself, Serpent X, who set it all up, and others. Until then, stay private and mind your biz.